What do you think Twitter needs to do to improve their business?
So always great to be here. Thanks a lot for having me. Look, I think Twitter needs to do two things. One is going to be a little bit weird advice-wise. The other one's going to be
I
pretty
like weird.
bored. I know,
Let's
that's why I'm
weird.
on, right? So I appreciate that you like weird. So the thing I think that they need to do that everyone else doesn't think is they need to resist the Wall Street temptation to be just like Facebook, because Wall Street's in love with Facebook right now and doesn't exactly understand Twitter. The other thing they really need to do, though, is they need to get a really good onboarding process, because right now Twitter is alienating, it's hard to use, and it's a place that if you're not familiar with it, it's a great place to go and make a mistake that embarrasses yourself. It's almost Carlos dangerous if you're not exactly sure what you're doing. They need to change that, and they need a great self-serve ad platform. They do those two things. They don't have to be Facebook, and they can be hugely successful. And they're kind of well positioned to do those things, but they definitely haven't done them yet.
Interesting, because you're right. They are being urged to do those kinds of things. Paul, when you look at the numbers here, I mean, I pulled up a couple things. The user base is one of the things that sort of jumps out initially. I mean, you can't really imagine Twitter without looking at the user base and that growth. And the user base is not really moving at the pace that it used to. Yes, they're up to 302 million monthly active users, and that's a good thing. But the pace of increases, 4.9% last quarter was, is better than the previous quarter, but really not, when you look at that user growth rate, really not what you want to see in terms of acceleration.
Exactly, particularly when you take a look at the multiple that the stock is trading at. So I think, when you talk to investors here and some of the frustrations that they voice is that, as Max suggested, that, they have to re-accelerate the user growth. And one of the ways that the company has talked about is by making it easier to onboard and bring some of the casual users onto the service, onto the platform, so that they can ultimately monetize those users. Because if they're not logged onto the platform, they can't sell advertising against them. So that is really the big issue. Number one is to re-accelerate the user growth. How do you do that? I think it all comes back to product. I think they really need, as they think about who their CEO is going to be, they really, in my opinion, need to think about product first. Not sales, but product, and try to think about ways to innovate the product to make it easier to attract a larger user base, and that's where they need to be. As Max suggested, they might not be a Facebook story with 1.4 billion users, but they certainly need to be bigger than 300 million if they really want to be viable for a large number of advertisers.
Yeah, and I guess I look, Max, I'll get you some more of my pathetic attempts to be an analyst again. But when I look at the value of a user, I look at revenue per user, and it's gotten a lot better at this company. Every quarter seems to get better. I think in the most recent quarter, it was $1.44, and on a year-over-year basis, if you look at the increase in that, yes, it was down from the December quarter, but it's an advertising-based business. I think it's fair to look at it on a year-over-year basis, from 98 cents to $1.14, or a 47% increase. The good news is it's a 47% increase. The bad news is the pace of the increase is coming down.
Yeah, so by no means pathetic. Much better fundamental analysis than most of the kind of bears and bulls screaming about the name are throwing around out there. So, I mean, look, the truth here is we have great growth. The problem is that they got a little bit over their skis on the valuation. So it's great growth. The problem is if you're a $24 billion market cap, then you're expected to do great growth all the time with engagement growth. And the other thing, to your good point, we layer on that is they have a problematically high ratio of voyeurs to exhibitionists. In modern social media, you need to have a certain amount of voyeurs, obviously, but you want to have a lot of exhibitionists because it keeps the content fresh. It gets people kind of logging in all the time, and they have had an awfully high number of watchers to doers.
Voyeurs to exhibitionists. That was made to tweet. Thank you for that. Paul Sweeney, I'm going to let you have the last word here, but I wonder if the key for them, or the false promise for them, has the ability to use data from customers, from tweeters, if you will, and actually come up with more relevant results, both in the customer experience and for advertisers. It doesn't seem like they're getting that.
It doesn't. You mentioned, the revenue per user is increasing, and that suggests maybe that they are doing a better job at monetizing their user base, and that's the good news. I think there's certainly a lot more they can do, again, on the product side, making it easier to onboard, and number two, on the advertising tools, trying to make it easier for advertisers to advertise on the platform. So, I think the real issue for investors is, and again, it unfortunately comes back to the comparison with Facebook. Is Twitter more of a niche advertising medium? And it's hard to say 300 million users is a niche, but relative to some of the other platforms out there, it might be. Or is it more of a mass advertising platform like Facebook with 1.4 billion? I'm not sure where they need to be, but they certainly need to position the story better with investors as in terms of an advertising platform.
We got Max Wolf on one side. We got Paul Sweeney on the other side. In terms of exhibitionists or voyeurs, I'm going to let you guys figure that out, but I do want to thank you.